Could you talk about where their cash extraction cost per ton compares to competitors? Are they in the top 20% or the bottom 20% or things like that?
Currently, KGHM is in the third quartile of producers of copper. But however, thanks to acquisition of open pit mines, which has lower extraction cost, the cash cost is expected to decrease and being actually in the middle of the other producers of copper.
So today they're higher cost than average, and they will go to average cost.
Yeah, before acquisition they had higher cost.
I have a couple of questions. One is looking at some of the mining stocks, that a lot of the mining stocks from places like Russia are quoted on the London Stock Exchange. Do you think that this company would be a lot higher, valued more highly if it was quoted in London? That's one question. And then the other question is about the dividend. Is it really high because the state ownership wants the money? I mean, doesn't that mean that money that should be spent on developing the company is being kept by the government? And is that a problem for the stock? Is that one of the reasons for the discount?
Could you repeat the second part?
Oh, just the high dividend, being all the money going to the dividend. It's a very, very high dividend. Does that mean that that money could be spent on developing the company instead? But it's just because the state ownership means that the state wants their money from the company. Does this mean that the company has a reduced growth opportunity going forward?
Can I answer this question? Okay. So the dividends actually are paid from the money that it's not spent on a future growth, because for this moment there are no new opportunities for new growth projects or M&A opportunities. So this cash laying just on cash account is distributed to the shareholders, and of course the state treasury is putting constant pressure on the highest dividends possible. And but in case of new projects, there allows KGHM to buy, for example, Quadra.
And when it comes to the first part of the question regarding the listing on the London Stock Exchange, actually when the company was introduced to the Polish Stock Exchange, it was IPO in 1997. It was also introduced in the London Stock Exchange. You are the certificates. However, the liquidity was very low, and in 2009, actually, company was delisted from the London Stock Exchange.
I would also like to add that the current status of the company requires let's say, the permission of the state treasury to issue new stocks, and we expect that the current capital structure will be more profitable for the company to issue debts rather than issue stocks. And also, the state treasury would. I don't really think that they will just permit the dilution of shares, because then they will get lower dividends. So this is also a thing that is connected to dual listing.
Okay, thank you.
Do you have a breakdown of the company's sales in terms of geography?
We analyzed KGHM customers, and it turned out that six the biggest customers comes mainly from Europe, especially Germany, France, Italy, and one is outside from Brazil. And they take on average 50% of KGHM revenues. However, it means that not only KGHM sales are diversified, but also those companies are really well diversified, because they are well established and managed companies with diversified sales around the globe. So even if there is some contraction on even if there is a contraction on some markets, the operational risk of the company is limited, as well as contagion from the other markets is limited as well.
Okay, and in terms of sensitivity to forex rates, could you please talk about that? The sensitivity of changes in the forex to the net income, basically.
Actually, we included foreign exchange rates on equal with changes in copper prices, and silver prices, because they are the most important revenue drivers. And we investigated their impact using Monte Carlo analysis. And as you can see, it turned out that 75% of outcomes lies to the right from the current price level. Estimating our inputs to the Monte Carlo analysis, we used historical data up to 12 years to the past. So we consider our analysis to be quite reliable.
Yeah, and we allow the prices of the metals as well as the exchange rate to fluctuate around to up and down by 60%.
Sorry, could you repeat that?
Yeah, we allow the fluctuations in our simulation of the prices of the metals as well as the exchange rate by 60%.
Okay.
Just a quick question on execution risk with moving international. Can you talk a little bit, I think it was Sierra Gorda, where is that? And that's where all the revenue is going to come from.
Okay, so the Sierra Gorda is an open pit mine in Chile. And I know whether you want, for instance, know what is the risk, what are the expenditures, the delays. So maybe I will talk about the most important things for the investor. So currently, not a long ago, I think a month ago, there was an update about this mine. And there were no delays that are quite common in the mining copper sector. And also, this is the most important project that will contribute to the diminishing the cost of the company. And also, we believe that the chance that the projects will fail is limited due to the fact that the KG Engines management works very strictly with the Quadras management, so the acquired company that has wide experience on MAN ground, as we can see in the graph. Therefore, we believe that the risk is quite limited.
So just as a follow-up on that, what is the cost of that extraction from that mine going to be relative to Codelco?
So now currently the cash extraction cost for KGHM is $2,000 and $300. And when it comes to the open pit mines, the average projected cash extraction cost for the Sierra Gorda projects is around $1,600 per ton.
Does the company have any strategy of channeling more sales to higher growth markets like China, for example, or being more aggressive in these sort of markets?
Well, in terms of sales, the copper is actually very similar products. You know, we cannot differentiate much. And in terms of the copper, the transportation costs are really a big part of the sales. That's why the possibilities are slightly limited. However, the international diversification in terms of the operation in Canada, USA, and Chile allows company to expand to new markets. And possibly it might be even China or India, which are currently the main drivers for the demand of the copper.
If I can add something, the KGHM is also a subsidiary which is located in Shanghai, which is observing currently the China market. So the company is also taking care of this market and taking consideration involving in this market.
And as far as silver is concerned, is it a byproduct when it comes to their operations, or?
Yes, it is actually the main byproduct of the company from the current domestic operations. However, while the portfolio of the mines are going to expand, also the new byproducts are going to be introduced to the company's mineral portfolio.
Okay.
Could you talk about what portion of the value of the company comes from existing projects versus new projects, and the risk of slippage on the new projects?
Okay, so we've also done some analysis what value of the acquired Quadra has on the overall company value, and we estimated that the 35% of the value of the whole company at the moment is due to the international projects. And what was the second part of the question, or it was the whole question?
New future projects versus existing. So you're saying one-third is from growth projects.
Yes, so the stock would be priced at, with DCF valuation. We assume we have the scenario that there are no international projects, and we valued the stock for 150 zloty. And comparing to that, and we assume in this scenario, zero.
Thank you.